opportunities to get rich by investing in gold. Greetings, dear viewers and friends. Many people don't care about politics because they think too complicated and doesn't concern them. But let me ask you this. Does making money concern you? Every opportunity to earn money depends on whether you can see through the bigger picture and then act in line with the currents of the times. So, listen carefully. This is actually very simple. In the past, we didn't dare loudly utter the three words de-dollarization, because everyone knew that countries opposing the dominance of the US dollar never ended well. For example, Japan has been stuck in a lost decade for 30 years and still hasn't recovered. Greece even fell into bankruptcy. Countless nations have been deceived like this, but still endure it. The tricks of these capitalists are like shearing sheep. They always use the same tactics. The process is very straightforward. Look back to 2020 when the COVID-19 pandemic broke out. The capitalists at the US Federal Reserve claimed the economy was struggling and needed stimulation, so they started printing money like crazy. When money flooded the market, its value dropped, and interest rates, the cost of borrowing, plummeted, making loans easier to obtain. At that point, big corporations, major banks, and even governments rushed to borrow money to invest and do business. A massive amount of dollars flowed into the market, driving up prices and causing inflation. Stocks, cryptocurrencies, and even things like NFTs, just virtual images, skyrocketed in value. Countries like Vietnam benefited briefly because money from the US flowed in. But once the sheep's wool had grown thick and the economy entered a bubble phase, the Fed suddenly announced they'd stop pumping money. In 2022, they raised interest rates under the pretext of fighting inflation. This meant they wanted to encourage people to stop investing and doing business, and instead deposit money in US banks to earn interest. Those holding stocks, Bitcoin, and other investments worldwide were forced to sell off to keep dollars in their bank accounts. As a result, stock markets crashed and corporate assets plummeted. Not only that, when the dollar gained value, assets in other countries became dirt cheap in comparison. That's when American capitalists used their now more valuable dollars to buy up assets from other nations at bargain prices. This is how they exploit financial cycles to seize global resources. Have you noticed? Every time the Fed raises interest rates, within 6 months to a year, American capitalists quietly scoop up assets from other countries. Meanwhile, financial experts in your country warn that the real estate market will collapse, stocks will tank, and advise you to sell everything and hold cash. The result? History repeats itself. Ordinary people always sell their homes when prices drop, buy when prices rise, and get sheared every time. That's why some nations started thinking, if, in the end, our people's assets are all gobbled up by American capitalists, and the money we earn flows into their pockets, why don't we stand up and resist? That's why you're hearing countries like China, Russia, Argentina, India, and Brazil declare they'll stop using the dollar in transactions. At the same time, many central banks are quietly stockpiling massive amounts of gold, pushing its price sky high. I've said before that I'd buy gold not for investment, but as a hedge against financial crises and wars. But recently, I've realized gold also has huge speculative value. For ordinary people, this could be a life-changing opportunity. More importantly, the rules of this game are easy to grasp. I've spent a lot of time researching and making this video to guide you on a journey of thought. If you don't support me with a simple like, there might not be anyone left to share these insights in the future. My channel focuses on sharing investment and business mindsets for those who want to take control and become wealthy. If you don't want to miss out on this critical information, follow my channel for free and turn on notifications. First, why do we rarely hear that investing in gold can yield massive profits? In my view, gold is essentially a substitute for the dollar. When the dollar is strong, gold weakens. But if the Fed keeps printing money, shouldn't the dollar lose all its value? So why does it still maintain its dominance? The reason is that the financial elite have found a way to manipulate the world. They tied the dollar's value to a tangible commodity, even if the dollar itself has no intrinsic worth. Because it's linked to something valuable, it retains value. This allows them to print as much money as they want without losing control. So, what's the truly valuable asset? Every developing nation needs oil because it's the lifeblood of industry. But the U.S. isn't an oil superpower. So what did they do? They looked at the map and saw Saudi Arabia, a major oil producer. Using money and military might, they forced Saudi Arabia to become their little brother, mandating that oil be traded only in dollars. That means, if you want to buy oil from Saudi Arabia, you have to convert your currency to dollars first. But one little brother like Saudi Arabia wasn't enough. Sparked wars across the Middle East, forcing most oil-exporting countries in the region to use dollars for oil trades. Beyond wars, they also used human rights as a weapon, setting up opposition groups, creating cultural and political conflicts. If any nation tried to break free from U.S. control, they'd immediately be accused of human rights violations. At best, they'd be isolated from the global community. At worst, they'd be overthrown or attacked militarily. The message was clear: obey us and you'll get money. Resist us and face the consequences. Thus, small nations had no choice but to join the U.S. financial system to make money alongside them. Once they earned money, U.S. banks lured them into investing in American financial markets with promises of high returns. After collecting money from these little brothers, U.S. financiers used it to lend to poor nations at exorbitant interest rates, turning them into financial slaves. Imagine you're the leader of a poor country. You want to develop your nation, but you have no money, no oil, no industry. Then American financiers show up and say, "We can lend you money and ensure other countries sell you oil. Just pay us back on time." You're left with two paths: stay poor and be suppressed by the U.S., or accept their terms and bet on a chance to rise. But honestly, you don't really have a choice, because every other country has already signed up. If you refuse, they'll develop while you fall further behind. Before you know it, your entire nation becomes a little brother to American financiers, working for them. If you can't repay the debt, they'll seize your country's most valuable assets. If you grow strong enough to pay it off, they'll pocket huge interest, then punish you with trade sanctions, economic blockades, and fund opposition groups to destabilize you. Many think the dollar is just a currency, but in reality, it's money. While the currency is goods and resources like houses, cars, even bubble tea. The trick of American financiers is to use money to acquire real wealth. What does that mean? When you're forced to use dollars for transactions, like buying oil, you need to stockpile dollars to pay Middle Eastern countries. This means you must hoard dollars to stabilize your exchange rate. But when you hold $100 billion in dollars and don't use it, it's just worthless paper. Yet, to get that paper, you have to trade real goods and resources of actual value. In other words, you're exchanging your tangible wealth for a pile of paper the U.S. can print any time with a few machines. Think it ends there? No. The Fed and American financiers will show up again and say, hey, want to make money? You don't need to hold so many dollars. Take that $100 billion and buy U.S. government bonds. They'll keep persuading you. America's not going anywhere. U.S. bonds are the safest asset. Give us $100 billion, and we'll write you an IOU. We'll hold your money for 10 years, then pay you back with interest. If you agree to buy $100 billion in 10-year U.S. bonds, American financiers instantly get $100 billion. They'll use it to buy your country's resources and assets. This is how they profit massively without spending a dime. 10 years later, they'll repay you with interest. But how? By borrowing from other countries to settle old debts. That's how America stays rich. Remember this. Poor people live in paradise, but keep their money in someone else's bank. Rich people live in paradise, but keep their debts in the bank. The USS, the world's biggest economy, shows you that the rich are the ones driving Lamborghinis bought with thrive loans from banks, where the poor deposit their money. The Fed has borrowed from the world, taking the hard-earned fruits of other nations' labor with worthless paper. This is dollar hegemony, a system that turns most of the global population into financial slaves working for them. How does it feel? Like you thought you deposited $1 million into a fixed savings account, but the fund manager tricked you and used it all to buy lottery tickets. In 2008, when the financial crisis hit, American financiers created a high-risk financial product and sold it to the world. Then the system collapsed, and $4 trillion vanished without a trace. In any other country, this would have led to total ruin, like the tulip bubble in Holland or the fall of the British Empire, but not America. They recovered in just 2 years. Why? Because they can print money 24/7 without limits, forcing the world to bear the consequences. They pump that money into domestic companies to weather the crisis. When the U.S. economy recovered, those firms repaid the Fed with profits, and the financiers used that money to buy assets from struggling nations. The funniest part? Those countries, even if furious, don't dare protest. To develop, they need oil, and to buy oil, they need dollars. As the Fed keeps printing, the dollars they hold lose value, turning into worthless paper. If they resist, the U.S. labels them human rights violators, so they just grin and bear it. But after enduring too long, they're left exhausted, with nothing to eat, nearly starving. Then the U.S. generously offers some food aid, calling it humanitarian support. In reality, it's just to keep you alive so you can keep working for them. And you still have to thank them for it. There's no other way. In this world, the strong and the smart write the rules. This is a capitalist society where wealth always ends up in the hands of the elite. You can't expect anyone to help you, not even your government, which might also be a victim. Only you can protect your assets. Now, after being repeatedly sheared, many nations can't take it anymore. Did you know, over the past 3 years, Issues with the pandemic and energy have pushed the U.S. into a severe public debt crisis. Here's the breakdown. GDP is America's income, but their public debt has reached 126% of GDP. Such imbalances have appeared in places like Argentina and other nations, leading to serious economic crises. So, countries lending to the U.S. are worried. If America keeps borrowing like this and one day goes bankrupt, will the money they owe me still be worth anything? We've seen the U.S. freeze a huge chunk of Russia's overseas assets, and you might not know this, but among those assets were a ton of U.S. government bonds. This shocked other nations. They wondered, what's going on? If I stop cooperating with the U.S. someday, will they freeze my bonds too? If they don't have to pay back, that's too dangerous. I need to sell my U.S. bonds now. This sparked a wave of U.S. bond sell-offs. When nations pulled their money back, they initially planned to deposit it in U.S. banks to earn interest from the Fed's rate hikes. But then Silicon Valley Bank collapsed, nearly wiping out their deposits. They struggled to withdraw their money and moved it to Switzerland, only for Credit Suisse to collapse too. So, with a huge sum of money, they can't just stash it away. It'll lose value. Nor can they invest in high-risk assets like oil or stocks. What's the solution? Only one option left: rush to buy gold. How crazy is this gold rush? Let me tell you, central banks of many countries have quietly bought up massive amounts of gold, measured in tons. In just over a year, nations have purchased 1,200 tons of gold, the highest in 55 years. Everyone knows the world's gold supply is limited. If there are only 100 gold bars, and nations have hoarded 80, the remaining 20 on the market will become extremely scarce. That's why gold prices keep soaring. So, the big question many people care about: can ordinary folks seize this chance to make their first fortune from gold? Many think gold offers low returns with high volatility. Over the past 100 years, gold's average annual return was just 4.6%, far below U.S. stock indexes, while its price volatility hit 15.2%, higher than stocks. But is that really true? To understand gold prices, we need to split it into two phases. The first is before 1971, when gold was treated as currency. Back then, all nations stockpiled gold as a reserve asset. If one country held gold and another held Japanese yen, how do you determine which currency is worth more? How do you set exchange rates or trade? The answer: the country with more gold had the more valuable currency, because gold reserves determined the value of issued money. This was the gold standard. At that time, the U.S. held the most gold, so they declared the dollar could be directly exchanged for gold. Other nations didn't need to hoard gold anymore, just hold dollars. That was the first era of the gold standard, when gold was the world's common currency. But from 1971 onward, everything changed as the world adopted the dollar. American capitalists said, "Since none of you are exchanging dollars for gold anyway, we'll ditch the gold standard." From then on, the dollar was no longer backed by gold. It relied solely on faith in the U.S. government. Gold lost its monetary role and became an asset like silver or other precious metals. Hearing this, you might be even less inclined to invest in gold. It used to be a globally recognized currency, but now it's just a regular precious metal. It doesn't generate dividends like stocks or rental income like real estate. So why buy it? But if you seriously look at gold's price trends, you'll see that before 1971, its price barely moved. It was a flat line. After the gold standard ended in 1971, gold started surging. Why? When gold was currency, it was just a tool, so it couldn't fluctuate much. But once it became an asset, it started being speculated on and hoarded. As faith in the dollar wanes, gold's price keeps climbing. So, if we want to evaluate gold as an investment, we should start from when it became investable, post-1970. From 1971 to 2000, gold's average annual return was 6.8. It's exceeded 10%, even hitting 50% in some years, higher than many investments, including stock index funds. I've said I've always had a habit of hoarding gold, not for investment, but following the advice from Rich Dad Poor Dad to treat it as a safe haven. But after years of holding it, I noticed something interesting. I never planned to sell because I like stockpiling gold and real estate. My strategy is to hold tangible goods, so I never go hungry. But some might ask, if gold's average return over the past 23 years is over 10% annually, why do so many people, especially women, lose money on it? Simple. They don't buy gold bars or coins. They buy jewelry, a gold necklace or bracelet. For weddings, no matter how beautiful, includes crafting costs, dragon phoenix designs, and hidden fees. You lose money the moment you buy it. Also, when we talk about a 10% average annual return over 25 years, we're looking backward to calculate. It doesn't mean you get a fixed 10% every year. For example, if you lost 5% last year but gained 25% this year, that's 20% over 2 years. 10% annually on average. Got it? People new to investing often think it's like a savings account or a financial product with guaranteed yearly returns. But investing always fluctuates. If you'd put $100,000 into gold in 2003 and held for 10 years by 2013, earned a 4.5x increase, averaging 16% annually. But if you bought in 2013 and sold in early 2019, you'd lose about 1%. On the other hand, if you bought in 2019 and sold in 2020, you'd gain 20% in 1 year. If you want quick profits by buying and selling constantly, that's short-term trading or speculation. You might profit, but you could also lose big. But if you buy gold and hold for 10,000 of me, see then. Still, I don't sell gold because its true value peaks during severe financial crises, when people jump off buildings, or during wars. Even if that doesn't happen in my lifetime, I'll leave it to my kids. I don't need to sell because its value keeps rising. Only if I desperately need cash would I sell, and I'd still profit. Plus, I believe no insurance is safer than gold. In major crises, insurance companies can go bust, but owning gold can elevate you a few social ranks, from a regular merchant to nobility. So for me, whenever I have money, I keep buying gold. I'd rather buy gold than too much insurance. But if you are someone who wants quick profits and finds assets like derivatives, stocks, or Bitcoin too risky, let me tell you, gold is a relatively easy trend to grasp and can help you make money fast. Just understand one thing: gold's core value lies in its ability to hedge and preserve wealth. When people's need for a safe haven rises, so does gold's price. Look back at the gold market. The uptrend started in August 2018, when gold was just $1,100 per ounce. What happened then? China trade tensions escalated. From there, gold kept rising, hitting 14.05 May 2020. But in the next 5 months, it soared to a historic high of 2,070. Think about it. What happened between May and August 2020, right? The COVID-19 pandemic erupted, sparking global panic. But after August, good news trickled in. People realized the initial panic was overblown. It wasn't an incurable plague. Most had caught the virus, gotten used to it, and vaccines were in development. Plus, a new U.S. president took office, and markets hoped he'd ease trade tensions, so gold prices dipped. By 2022, when the Fed announced rate hikes, big money flowed back to the U.S., strengthening the dollar and pushing gold down. In early 2025, when Trump took office and imposed global tariffs, tensions spiked and gold hit a new historic peak. See the pattern behind gold's swings? When the world's full of good news and people feel secure about the future, they prefer cash and gold drops. But when the world's rife with bad news, when everyone's worried and complaining about the economy, gold rises. Now look at today. Big corporations are laying off workers, banks are failing, trade wars are intensifying, and many nations are being financially manipulated by the U.S. All these factors are driving gold higher. Plus, more countries are ditching the dollar and pushing for de-dollarization, weakening the dollar, while gold hits record highs above $3,100. The most important investment in the world is in yourself. Your brain is your greatest asset. It can devise countless ways to make money. If you're like me years ago, no capital, no connections, no family backing, even in debt from school fees. What you need isn't to learn finance, but to find an automated business that earns money while you sleep. Many people, tied to jobs, have no time to invest or learn. Their salaries are capped. No matter how much they beg, it won't change. Most crucially, the world's changing fast. If your industry can't go online, it'll be obsolete sooner or later. Look at journalism. Around for centuries, seemingly unshakable, but who reads print papers now? Everyone gets news on their phones. Street ads used to dominate, but now YouTube and personal media channels rake in the most ad revenue. Finally, recent news reported the discovery of 40 gold mines in Vietnam with nearly 30 tons of reserves. Why do you think this news broke now? Share your thoughts below. Due to time constraints, we'll stop here. I share free knowledge on becoming rich, entrepreneurial, and an investor to achieve financial freedom. If you don't want to miss out, follow my channel, turn on notifications, and share this video. I also wish everyone who liked this video the best. May you achieve financial freedom soon. If you found just 1 or 2 useful insights today to improve your life, I'm already satisfied. I'm FortuneCraft. See you in the next video.